Hi, everybody. My name is Julia, and we are glad to welcome you at our Unicorn Events Shorts. Today, we are speaking with David Mandel, Managing Partner at Emerging Venture Capital.
Thanks for having me, Julia. Well, before getting into venture capital, I spent about 28 years in finance and insurance, built and exited 4 separate businesses, the largest of which was Alliance United Insurance Company. It's an auto insurance underwriter, sold to Kemper, which is a public company, in 2014. And after that, I decided to go full-time into investing, which I was doing some angel investing previously. And starting in 2014, really, I started to kind of do angel investing more seriously, which eventually turned into joining several angel groups, becoming active there. And from that turned into starting a fund in 2019, which is Emerging Ventures, where I can gather other limited partners to join the fund and invest collectively from the fund, and therefore write bigger checks than I would as an angel and continue the process. And Fund 1 made 26 investments in various emerging tech startups throughout the US and Canada. And Fund 2, which launched earlier this month, is going to continue the process with another 50 to 60 investments over the next 3 years.
Great. I hear that you are a very experienced person in this area. And so today we will ask and cover some questions, very important. And please, we can start with the first one. What is the main industry you invest in?
I'm industry agnostic. I invest in emerging technologies for any industry. It's essentially either deep tech, invention of new deep tech, or using the convergence of current new technologies to solve real world problems in a way that wasn't possible just a few years ago. And it's an exciting time now that we're in, where there, combination of fast processors, machine learning, AI, sensors, the new coming 5G allows for a lot of new solutions to come up, where just the technology wasn't there. Even if the ideas were there, the implementation wasn't possible a few years ago, and the timing is right now. So there's some amazing new solutions every day in every field, from agriculture to advertising. It really doesn't matter what vertical it's in. It's just the same concepts of using, in a sense, combinations of sensors and AI and all that new technology to solve problems. So in Fund 1, we've invested in everything from autonomous drones to tools to help pig farmers prevent the death of baby pigs. It's a little bit of everything in there. And then something as mundane as sales tools, as AI sales tools that integrate into Salesforce, and it's just an AI SaaS tool for business. So it's a little bit of everything. It's just all exciting use of technology.
Yeah, great. Nice. And could you share with us, for example, what is your average check size?
Okay. We write checks mostly from 100 to 250,000, allocating about $200,000 on average to each startup that we invest in. And we usually, so we're investing in the pre-seed and seed stage mostly. The rounds are usually from $500,000 to $3 million, averaging about $1.5 million round, and we like to be about 10% of the round.
Yeah, pretty good, nice. And we know that it's very difficult to find good startups. Yeah, maybe you have some unicorns in your portfolio.
Finding startups has become easier. There's a lot of them, and there's a lot of pitch events like the ones that you produce. And there's many other pitch events, and there's many accelerator and incubator programs, both for-profit ones and nonprofit university run and other nonprofit programs that provide a lot of support to the startup ecosystem. So following those programs and attending their pitch days and meeting those companies before and during their graduation from those programs is a great source of deal flow. I get to see 300 to 500 different pitches on a typical month. Some months like March, where there's a lot of graduations from accelerator programs, is even significantly more. As far as unicorns, my portfolio is relatively young. I have a few companies that I'm hoping are on their path to being unicorns. There's already two that are valued over 100 million, one that's valued over 200 million that was actually featured in a article, in a national article write-up about the next unicorn. So, and the founder, who's a female founder, was interviewed on the Next Unicorn podcast, being thought to be possibly one of the next unicorns, but they're not there yet. Their last valuation was around 230 million. So it'll take another round or two for them to hit the unicorn status. That realizing that we usually come in at a 5 to 10 million valuation approximately, often with the early stage startups. 200 million is already a great markup. That's often a 20 or 40x markup for us on our investment, which is way on its path to being a home run.
Yeah, sure. And I'm interested in your way of picking startups you invest in, among others. So do you have some criteria?
Absolutely. And I mean, first and foremost, they have to be solving some kind of problem that's worth solving. So it's, I only invest in emerging technologies, as I mentioned in the thesis. And amazingly enough, a lot of the pitches are not emerging tech. I mean, there's everything, there's a lot of e-commerce, a lot of just consumer brands, and nothing wrong with that. But there's a lot of other great programs. There's some great accelerator and incubator programs that are really, really good at e-commerce and helping brands build their brand, build their online presence, and so forth. And I don't add value there, so it's not what I do. So I stay away from that and let others do that. So I can filter out 90 to 95% of what I see for just not being on thesis. If it's another beverage brand, it's not for me. And if it's a direct-to-consumer men's underwear brand, which I've seen 3 of recently, it's not for me. It might be a great business, but it's just not what we're looking for at this point. So obviously it has to be on thesis. And then after that, one of my main sayings is that all the founders are amazingly smart and hardworking. There's a lot of great, bright, hardworking founders, and there's a lot of great ideas. But I'm not an incubator. I can't invest in ideas. If I invested in ideas, I would be writing 100 times more checks than I am, and I would probably go broke because I don't have that filter. I don't know how to tell who's going to execute and actually build a good business and who's not. I can look at these founders and they all seem amazing and all their ideas seem amazing. So unfortunately, I can only invest in those who actually execute. I have to wait to that next step. They need to have some traction. They need to prove to me that they can build it and ship it. And then I invest. And that's, so all those who are saying, yeah, we have this, and they have this great presentation, and they say, okay, now we're raising around so that we can hire a team and build the product. I said, oh, sorry, that's not for me. Come back to me when you've built the product and have some customers willing to pay you for it. They don't have to have actual revenue, although most of the startups I invest in do, but they have to have some form of traction. I mean, one startup I just invested in has, in 3 months, 1.6 million users. And the monthly engagements are amazing, but yet he has 0 revenue. He hasn't figured out how to monetize it yet. He has a path to it, but he's building his audience first. It's a nice, and so far has no revenue. And I'm perfectly fine. I'm very excited to be investing in that startup, even though they have no revenue, but they have amazing traction. There's obvious product market fit. People want what he has. So there's no doubt that eventually people will be willing to pay him to stay in that community. With 1.6 million active users, there's no doubt for me. So that's amazing traction. On the industrial side, often startups may have just an LOI or some memorandum of understanding from a large enterprise client, in essence saying, we like your prototype, and if you build it, we will buy it. And that's amazing too. So I'll invest at that stage. I believe that they can actually execute on the agreements they have in place. So basically, it's that sweet spot of helping startups that built a prototype, built an MVP, start to have some customers that are interested, helping them go from there to where they can raise a large round. So getting from there to basically say 2 million in ARR is my job. My job is to invest and help them turn a baby into a fully mature child that can then go out there and be venture backable. So obviously, from that perspective, I'm reverse engineering. I'm saying, okay, is this a business and a founder who 12 to 18 months from now, maybe at most 24 months from now, will be able to raise a large venture round? Will they be venture backable? Can they go out and raise, say, 5 million at a 20 million valuation on average a year and a half from now? And then if the answer is yes, I say, well, what does it take for them to get there? And then we figure out how much money they need. And if they're raising the right amount of money and they're venture backable in the future, I'm happy to invest. And most of the time when I'm not investing, it's either because they're too early, so they haven't proven that they can deliver anything yet, or that I don't see them as venture backable. It's like, okay, that's a good idea, that's a good business, but I don't see someone giving you $5 million next year, therefore I'm not going to give you my smaller check this year because I don't see how this progresses. So that's a longer answer.
Absolutely. To your yeah. Okay, so we should go to the next question. Yeah, so we know that you were a lot of times as an expert during our unicorn battles, and as an investor, what do you look at in the startup pitching in the first place?
Right, so that's basically the same answer to the, I gave you a longer answer on the last question, so it would be the same answer. I'm looking for founders who can execute and who will be venture backable in the future, and just need my help to get them from that baby phase to the more mature phase where they'll be more venture backable. I'm looking for, so if a pitch only has an idea and they haven't executed yet, I roll it out. If a pitch, if what they're building is not on thesis for me, which is very often the case, if it's not emerging tech, I roll it out. And that rules out most of them. And then from the ones who are remaining, as I said, we're looking for their pitch to show me how they're executing, show me that they have some initial traction, and show me their plan to a realistic plan that I can believe that will take them in a realistic amount of time to, say, their Series A.
So they could include these parts in their pitch deck to show you how they would to execute these, yeah?
Absolutely.
Okay, and we know that now during the pandemic situation, yeah, it's very difficult to find investments, but how to pitch online and to find investor attention, for example? Do you have some suggestions?
It's been a very interesting 13 months. In some way, as an investor, it's been very efficient. Being in Los Angeles before, every pitch event would take a whole day. It would be 2 hours to get there, then spend some time there, and then 2 hours to drive home. From almost anywhere in LA in traffic is 2 hours. So doing everything virtually and being able to do it around the country and around the globe, it's been amazingly efficient. What we lose is that one-on-one connection. We lose the networking. We lose getting to know the founders in person as people. It becomes a colder interaction. So it's for the founders, when they get time to meet they should do more follow-up and one-on-one with the investors who are interested, and take longer one-on-one Zooms as if it's a lunch. I think they should treat the one-on-one Zooms as if it's a lunch meeting, and really spend some time with some small talk, get to know the investors, tell a little bit about themselves and their families, make a warmer personal introduction so you can feel like that investors want to invest in people that they trust with their money.
Yeah, really wonderful words. It is, yeah, I completely agree. And I would like to ask you to give a piece of advice to these startups, something what will help them to succeed in the future.
Definitely. thing I need to emphasize the most to early stage startups is just deliver. Don't make any excuses. You have an idea, don't keep it as an idea. Build it and build a team. Bring on co-founders. Single founders is very difficult. Build a team. Find some friends who are complementary to you, who have opposite skills of you. If you're a salesperson, hire an engineer. Bring an engineer as a partner. If you're an engineer, bring a business person as a salesperson as your partner, and bring a team of 2 to 3 co-founders who together will be passionate about the idea and who will push each other and motivate each other to deliver. And just do it. You don't have to raise money first. You don't have to quit your day jobs first. Most startups start part-time evenings and they just work really hard. They have their day job and then they're still spending another 40, 50 hours a week on their startup. It's a tough life, but that's how it works. So just build it. Build an MVP, a minimum viable product, and ship it and iterate. Get it out there, talk to a lot of users, test it over and over, get feedback, and keep iterating on the product, because everything you think your users will want, it turns out not to be what your users want. And the one part that they like will be completely different than what you thought they'll like, and you'll wind up dropping 90% of what you thought and completely iterating and pivoting several times. So deliver early, iterate often, get feedback, and just do it. Just go out there. Don't make excuses. Don't think you need to write up a business plan. You don't need to fundraise. You just need to build it, ship it, get feedback, then go raise money. Once you say, here, I have 100 users, and now, you can go out to a pitch network event and try to raise money. Never go out there and try to fundraise with an idea. Try to build something first and build it with some friends. It's a lot more fun doing it together with partners.
Yeah, awesome. Thank you. Thank you so much, David, for these powerful words. Really, I hope your advices will help a lot of founders throughout the world. And yeah, thank you for dedicating your time for our interview. I really appreciate it. And see you at our Unicorn events, where extraordinary startups pitch live to the famous VCs. Thank you so much.
Thank you, Julia.
Thank you. Okay, so here we stop. Just a second. Yeah, nice, very good. You did really great, I guess.